Good morning, traders. Today is June 3rd, a Tuesday, and welcome to your market briefing. Markets are kicking off the week with rising caution as trade tensions, geopolitical risk, and shifting central bank expectations dominate the headlines. So let's have a look. So let's start with the US dollar. The US dollar started the week on a softer note with the dollar index dipping to a near 1 week low just below 98.6 during the Monday session. And this drop followed a fresh round of tariff headlines. President Trump announced plans to double steel and aluminum import tariffs to 50% effective on June 4th. That rekindled the trade war fears, especially after China firmly rejected the US accusations of violating last month's Geneva trade agreement. Despite the tensions, there are some hope of diplomacy. A White House economic advisor mentioned over the weekend that a call between Trump and President Xi could happen as early as this week. And investors will be closely watching US economic data in the days ahead, particularly on Friday's non-farm payrolls, for more clues on how the trade policy is impacting the growth. And from a technical angle, the momentum is still leaning bearish. The dollar remains below key short-term moving average, and the RSI on daily chart hovers near 39, indicating ongoing pressure. And the markets are eyeing whether support at 98.32 or even 98 can hold, or if we will see a bounce back towards the 99 level. So moving on to the crude oil, the oil prices rallied more than 3% on Monday, defying negative trade headlines and news that OPEC will increase the production cuts again. And after the weekend meeting, the airlines confirmed an additional 411,000 barrels per day in cuts, which is the third consecutive monthly adjustment. And the markets welcomed the move, even as some member states have floated more aggressive production increases. And interestingly, the crude oil managed to climb despite the renewed tariff threats from the US and rising tensions with China. And this resilience appears driven by solid seasonal demand expectations and recent US inventory drawdowns, which have helped to ease concerns of oversupply, at least for now. And technically, WTI continues to hold above the psychological 60 level, with near-term resistance near $63 to $64. As long as we stay above the $60 zone, bulls may remain in control, but any negative surprise from the inventories or geopolitics could trigger fresh volatility. So next we talk about gold. Gold surged more than 2.7% during the Monday's European session, hitting a 4-day high above 33.80 as safe haven demand returned to the spotlight. And this rally was driven by two main factors. The first is renewed geopolitical tensions, particularly the Russia-Ukraine conflict, and concerns about the escalating trade situation following the Trump's latest tariff threats. And investors also reacted to a broader risk aversion. With equities struggling and the dollar under pressure, gold stood out as a go-to hedge. The dollar index dipped to 98.67, only amplified the gold's momentum. And from a technical view, the breakout above 33.25 marked a shift back to the bullish territory. And RSI is comfortably in positive territory, and if gold can push through the 3400 level, the next resistance lies around 3415, followed by 3450, and support sits back to 3300 and 3275 in case of a pullback. And lastly, the Australian dollar climbed towards the 0.65 level on Monday, supported by broad US dollar weakness. And despite the global risk off sentiment, the Aussie held firm, reflecting a strong technical picture and fading Fed hawkishness. And domestically, though, the data was more mixed. The Australia's manufacturing sector continued to weaken in May, and the retail sales unexpectedly declined, both signs of cautious consumer behavior and slowing industrial momentum. But still, the markets are pricing in further support from the RBA, and with iron ore prices holding up, the Aussie remains resilient for now. And technically, the Australian dollar is staying above its short-term moving average, and the RSI above 58 suggests continued momentum. And traders are watching whether it can break above 0.653 or whether we can see a consolidation back towards the 0.644. So to wrap it up for today, the markets are responding to a mix of geopolitical risk, renewed trade tensions, and shifting macro expectations. And a softer dollar, a firmer oil, and rising gold prices suggest investors are positioning defensively. With key economic data releases later this week, particularly the US job reports, we may see increased volatility. It will be important to stay alert as sentiment can shift quickly. And thank you for tuning in, and we'll see you tomorrow for the next update.